that view. Secretary Bessent, do you believe that raising deposit insurance limits would directly translate into more lending capacity for small businesses and farms that rely on community banks, particularly in rural communities like those that I represent across Middle and East Tennessee?
Congressman Rose, in a fractional banking system, deposits finance lending. When deposits flow out, the ability to have capital to lend is greatly diminished.
Thank you. Again, share that view. Mr. Secretary, the FSOC annual report highlights the terrorism risk insurance program and underscores that small insurers are significant participants in the terrorism risk market, with their market share stable since 2017. In light of that, and given that the Terrorism Risk Insurance Act backstop has never been triggered in more than 20 years, do you see any clear evidence today of market failure or a pressing need for federal intervention that would justify continuing a permanent federal backstop at current levels in this market, rather than beginning a responsible transition to a more private terrorism risk insurance system?
Congressman, I have no data, so I have no opinion, but I will get back to you on that.
Thank you. I'd appreciate. And how does Treasury assess, if you could add to this, or you can address it now, taxpayer risk under TRIA today? And do you believe that that risk profile is consistent with what Congress originally envisioned as a temporary federal program?
I used to be an insurance analyst, but I haven't seen the actuarial table, so I'm not going to comment.
Thank you. I was proud to vote with for President Trump's One Big Beautiful Bill and help create Trump accounts, which give kids a real foundation to build savings and wealth from day one. These accounts are a great way to help families in Tennessee and across the country start planning for their children's futures. Can you update us on how implementation of the Trump accounts is going so far, whether Treasury has the resources it needs to stand this program up effectively, and whether credit unions and small community financial institutions will be allowed to participate in offering these accounts?
I'll work backwards. Initially, there will be one master custodian for the accounts. So initially, these small banks will not be able to participate. Eventually, the holders of the accounts will be able to migrate out to designated institutions. The uptake is going quite well. We had a big event this week to roll out the accounts. More than 1 million households representing more than 1 million children have signed up. I would tell everyone to look for the commercial right after the national anthem at the Super Bowl this weekend. I think we are prepared for a flood of signups, and then they will go live on July 5th, and the goal is the lowest possible fees on these index funds.
Thank you, Thank you, Treasury Secretary. Hopefully no singing as a part of that.
Time has expired. Gentleman from California, Mr. Vargas, who is the ranking member of our Monetary Policy Task Force, you're recognized for 5 minutes.
Thank you very much, Mr. Chairman and ranking member and the witness. I have to confess that I'm very disappointed in today. I think a lot of our allies are losing faith in us. We hear it in our European allies, certainly. We see it in the diminishment of our dollar. But we always seem to have faith in sort of the Fed chairman and also the Treasury Secretary. They're always very serious people. They're always seen around the world as very serious people. I've been here for a long time now. I used to watch when a friend of mine, Sean Duffy, used to sit over there and scream at the top of his lungs at Jack Lew when he was Treasury Secretary. And the Treasury always answered in the most logical way, never flippant, never libelous. Would never say something like, sure, my colleague here wants to see Harriet Tubman on the $20 bill. She didn't say anything about not wanting confidence and not wanting to have secure money. That was a very libelous comment that you made, a very flippant comment. It was very disappointing to hear. And then to hear the libelous comment that you made about the Fed, that we lost faith in the Fed, you said in your testimony here today, because of inflation and the cost overrun in the buildings. You know, mimicking basically the same thing that the president said is about the chairman. You didn't say it in the same words, you said it in a way that's a little more elegant, It means the same thing. Today, you've been very performative in everything that you've done. That's very disappointing. I wanted to ask you about the independence of the Fed. I think it is important. You did comment about that a little bit. But today, I think has been pretty much a waste of time. But sadly, I think it really does erode the faith in our country. When a person as important as you give the answers that you gave today. So I'm not going to ask you any questions because I think it would be useless. But I was just going to say, Mr. Chairman, we've had some very good hearings recently. This was not one of them. This is not your finest day, and it's too bad because I think you're a very competent person. I disagree with some of your policies, but you're a very competent person. The president has put in some people in very important places that are sort of caricatures of incompetence. That's not you. Today was not your finest day. And with that, I yield back.
Gentleman from California yields back. Chair recognizes the gentleman from Wisconsin, Mr. Stile, who chairs our House Administration Committee and also chairs the subcommittee here on digital assets, financial technology, and artificial intelligence.
Thank you very much, Mr. Chairman, Mr. Secretary. Thank you for being here. Thank you for your service and your leadership at Treasury. There's been a lot of energy in the room today. A handful of times you made some great points. You've been cut off. So I want to go back and give you an opportunity to elaborate on a couple of these points. At the beginning of the hearing today, Ranking Member Waters, you were in the process of mentioning the 10 to 20 million illegal immigrants came into the United States during the Biden administration, functionally with the blessing of Democrats in Congress. As you mentioned that, and you were building into a comment about the impact that that would have on the price of housing in the United States, the ranking member said, "Can you shut up?" end quote. I think you're about to make actually a really good point about the impact that Biden's and the Democrats' open border policies had on the cost of housing. The time is now mine, and I'd actually love you to provide a little additional detail as to where you're headed there.
Good. Well, Congressman, thank you. And to answer Congressman Vargas, who isn't able to stay for the whole or to hear my reply, that as you would have seen, that when approached, I am happy to have a conversation. Representative Green, who is known for some fiery moments, and I had a very respectful back and forth, and I enjoyed my conversation with him, and it is a shame that all conversations cannot be like that. Yes or no answers to me mean that the representative has talking points from his or her staff and is unable to discuss things in a logical and in-depth manner. In terms of your question, we have had 4.1% economic growth for the past 3 quarters. We're on track for 3% growth, and the economy is doing very well. The financial stability that we are seeing, whether it is through growth or through economic security, we've been brought back from the edge.
President Trump, your leadership at Treasury, we have absolutely been brought back from the edge. In particular, as we think about the impact of housing, was Biden's open border policies directly related to some of the inflation that we've seen in housing? That's where you're previously cut off.
Yes, to come back to that, I would point to a study from the Wharton School that said that supply and demand works, especially in low-end housing, that letting in 10, 20, we don't know how many illegal aliens that flooded into the housing market, they all need someplace to live. So what we have seen is that the Wharton study says that for every 1% increase due to the illegal immigration, rents went up 1%. So if you got a 20% increase in population, then rents went up 20%.
And economics 101, supply and demand, and Democrats drove up demand by having a massive number of illegal immigrants coming into the United States.
The Democrats didn't care what they did to working Americans. We're seeing a substantial drop in rents.
Let me build another point you were making when you were cut off. You said that lumber's at a 5-year low. Ranking Member Waters then said, quote, "You don't get to talk," end quote. Again, the time is mine. You get to talk. Lumber's at a 5-year low. Supply and demand's in effect. What's the impact of that on the cost of housing?
Again, that facts can be facts can be annoying for people who just want to make talking points. And the fact is, we have not seen an increase in housing costs. The increase in housing costs came during the Great Inflation, up 21.5% for consumer prices for the CPI, up much more, up in the 30s for working Americans. So that's the cost to housing and regulation.
We're still recovering from the Democrats' terrible policies. Let me get one final point in. I chair the Digital Assets Subcommittee. We passed and was signed into law the Stable Act, setting forward legislation as it relates to stablecoin. Treasury is required to complete implementing regulations by July 18 of this year. Are you going to hit the deadline, and are there any impediments preventing you from hitting that July 18 deadline?
I don't see any impediments at present, and if we're going to hit them, we will notify you in the committee.
I appreciate that. Appreciate your service at Treasury. Mr. Chairman, I yield back.
I thank the gentleman. The gentleman yields back. I recognize the gentleman from Illinois. Mr. Gaston, you're now recognized for 5 minutes.
Thank you for being here today, Mr. Bessent. Appreciate your patience with us. Since the U.S. captured President Maduro, the Trump administration has been selling Venezuelan oil. Secretary Wright has said that's going to continue indefinitely. The president's January 9th executive order said that those funds are the sovereign property of Venezuela, but has directed you, the Treasury Secretary, to hold those assets in custody to facilitate disbursements transfers as directed by the Secretary of State. As I've gone through the 91 specific trusts that you have the statutory authority to oversee, none of those have any relationship to Venezuelan oil. So can you help us understand under what statutory authority, or what statutory authority is Treasury relying on to exercise the discretionary control over natural resources and sovereign assets of another country?
Treasury has no control over the...
I'm just asking about what statutory authority you're relying on.
Again, we are operating under an agreement between state and energy that we are not involved.
No, but the executive order said that the Treasury Secretary is holding those assets in custody. That's a specific language there, and is facilitating disbursements. Under what authority are you acting?
I will get back to you with the exact authority, but it is under an agreement with state.
Let me just clarify, because my concern is that the executive order cites IEPA. IEPA specifically says that you have to be engaged in hostilities with a country for IEPA to trigger that claim. Secretary Rubio said that we are not at war with Venezuela. I would agree. I'm glad we're not at war. So unless you disagree with Secretary Rubio, I'm unclear under what legal authority the United States has to control or disperse those assets.
Well, I would believe that the IEPA authority would act for a period of time for a
not unless we're not that's not
a transition.
Well, look, that's not true. But please provide in writing what you're doing there, because I want to get to why I think that's material. Last week, Secretary Rubio also said that the $200 million in proceeds was sitting in a Qatari bank that was owned by Venezuela. He went on to say the Treasury has a written agreement with Venezuela's interim government to review the monthly budget request for payments from that account. I come back to where the authority comes. What statutory authority are you using to exercise custody indirectly through a third country and direct the release of funds from those offshore accounts?
Yeah, IEPA.
That's not in IEPA. You're managing, okay, so if you're managing a third country, not in IEPA, and please do provide us with the legal guidance, because this matters. What controls are you putting to audit those flows? Because as you know, the Venezuelan government still has a lot of shady people. How are you controlling the dispersion of those flows so that they don't go back to some of the shady characters that the president is concerned about in Venezuela? What is the audit process?
Again, we will be bringing in outside auditors for this, and the Venezuelan government will be producing.
Do you have an agreement in place right now for those auditors?
Sorry?
Do you have an agreement for that audit in place right now?
Not at present.
Okay, because Secretary Rubio, when he was asked that question before the Senate, he said that the Treasury had handled the agreement that he would be providing to the Senate committee. Are you saying that Secretary Rubio was incorrect, or that you're not aware of the agreement the Treasury directed according to Secretary
I'm saying I'm not aware of the agreement.
Okay, so Secretary Rubio said he would provide that to the Senate committee. Can you please coordinate with Secretary Rubio and give us your word to provide us what Secretary Rubio is providing? Because he is alleging that was done under your
with pleasure, Congressman. And okay. Just so you know, the goal here, it's been 30 days.
I want to just move, reclaim my time, because the concern I have is that in this would be considered a fraudulent conveyance. I have a specific concern that we've entered into contracts with companies like Vitol, who have pled guilty to bribery and all sorts of nefarious actors. If I was a company buying stolen goods and we didn't have statutory authority, I'm gonna have a lot of creditors coming after me. One last thing, sir. I want to read you a quote. Trump will pursue a weak dollar policy rather than implementing tariffs. Tariffs are inflationary and would strengthen the dollar. Do you recognize that quote?
I believe you're referring to a letter that I wrote, and
Yes.
Tariffs could be inflationary.
No, it says tariffs are inflationary.
Yep. You know what?
You had
Sir,
said to the chairwoman, I'd like to introduce into the record a January 31, 2024 letter from, quote, Scott Bessent and the Key Square team to your partners, where that quote comes from.
Without objection.
Do you want to correct what you said to the ranking member when you specifically said that you did not say tariffs are inflationary?
Well, I think she referenced a letter in the summer of something, not that particular.
No, I think you disparaged the New York Times.
Sorry?
You said tariffs are inflationary.
Sorry?
You said tariffs are inflationary.
Tariffs-
Do you want to correct what you said to the ranking member, or did you lie?
If I was mistaken, I want to correct it. And I was also mistaken when I said that tariffs could be inflationary, because they
Gentleman's
haven't been.
time has expired.
I've seen inflation drop to 2.1%.
Gentleman's time has expired. Chair now recognizes the gentleman from South Carolina. Mr. Timmons, you're recognized for 5 minutes.
Thank you, Mr. Chairman. Ms. Secretary, it is great to see you again, and thank you for being here. Your experience and leadership at Treasury are widely respected and appreciated as we work to make the U.S. economy more competitive in the global economy. And I know you were hearing some questions about tariffs. Is that the purpose of the last year, to renegotiate our trade agreements to make the U.S. economy more competitive in the global economy?
100%. There are numerous goals, but it is to make the U.S. economy more resilient. We're now seeing 4.1% growth for the past 3 quarters. So we are seeing inflation drop. So tariff inflation was the dog that didn't bark.
Well, I appreciate it. I think that the businesses that are trying to compete in the global economy are far better off because of the last year. There was some strain through the uncertainty, but most of that is behind us, and I just really appreciate your hard work. Additionally, after several years of regulatory uncertainty and pervasive government overreach, it is encouraging to see serious leadership at Treasury focused on restoring balance to our financial system. That work matters not only to markets, but to families, small businesses, and communities across the country. You've called for a fundamental reset of financial regulation and emphasized Treasury's role in promoting appropriately tailored regulation to support economic growth. I agree with that approach. While there's been progress on tailoring supervision, far less has been done to modernize regulatory tailoring itself, particularly the interagency thresholds that trigger enhanced prudential standards for Category 2 through 4 banks. Those thresholds were set years ago and have not been updated to reflect inflation, economic growth, or changes in the financial system. As a result, banks that were never intended to be treated like GSIBs are increasingly subject to requirements that do not match their risk profiles. Republicans on this committee raised this concern in a letter to the federal banking agencies last November. Mr. Secretary, my question is this: how are Treasury and the Financial Stability Oversight Council working to coordinate across the agencies to modernize and update these thresholds and to ensure that regulatory tailoring keeps pace with economic reality rather than falling further behind it?
Congressman, I believe there's a chance that the community banker who I referenced with 200 million assets may have actually been from your district. So we are all hands on deck, and we've seen 50% of these institutions disappear, and we are working as quickly as we can. Again, one size fits all for regulation is a disaster, and as potentially the woman, the bank president and owner from your district said, Bank America's regulatory regime is not good for something in the Piedmont and upcountry in South Carolina for a bank with 200 million assets.
I couldn't agree more. Tailoring should apply not only to prudential standards, but also to supervision itself. For example, my bipartisan legislation, the SMART Act, would allow smaller, well-managed, and well-capitalized institutions to combine certain consumer compliance and IT exams, reducing unnecessary burden while preserving strong oversight. Ms. Secretary, how can legislation like the SMART Act and other bipartisan efforts this committee has advanced help build on the principle of tailoring and restore a regulatory framework that truly works for Main Street without compromising safety and soundness?
Congressman, I think may be very important to get this into a regulatory framework, because what we've seen for too long, just as the bank examiner said to the $200 million banker, you should be more like Bank of America. We cannot have supervision, or we cannot have regulation done through supervision. We need to have clear guidelines for tailoring for many banks, as I said earlier, are industry concentrated, geographic concentrated, and we have got to push this through, or we're going to, they will be too small to succeed.
I couldn't agree with you more. Thank you for that. I want to close by discussing the trillions of dollars in foreign direct investment that you and President Trump have shepherded into the United States over the past year. In our home state of South Carolina alone, hundreds of billions of dollars in new investment have been announced that will create high-paying, highly skilled jobs for our communities. Nearly every week I'm in Washington, I meet with a foreign manufacturer that is expanding its footprint in the upstate. And I also want to thank you for your work to remove tariffs from coffee, which has been directly welcomed by manufacturers like Keurig in South Carolina that have benefited from this administration's commitment to fair and sensible trade policy. It's hard to believe that the largest coffee manufacturer in the world is in Spartanburg, South Carolina, but it is, and we greatly appreciate your work to help make sure that they're competitive in the U.S. economy and the global economy. And with that, Mr. Chairman, I yield back. Thank you.
And Congressman, I would just point out that there's a lot of discussion on coffee prices.
Gentleman's time has expired.
Coffee prices experienced a global.
The gentleman's time has expired.
Thank you.
Please, Mr. Secretary, if you'd respond in writing if you have more on that topic. Now, Chair recognizes the gentlewoman from Massachusetts. Ms. Presley, you're recognized for 5 minutes.
Mr. Secretary, it took a year to get Secretary Turner before this committee, so I'm grateful for your return. And I want to pick up where we left off 9 months ago. The average American spends over $20,000 on baby costs in the first year of having a baby. Essential products like car seats are more expensive because of Trump tariffs. You told me last time that they were under consideration, but nothing has changed since May of last year, much to the distress of families. There is still no exemption for tariffs on baby products. For the record, Mr. Secretary, how many tariff exemptions are there?
There are actually very few now.
You're right. Actually, I think there's some 30 pages of exemptions totaling over 1,000, including for asbestos. Can you explain to families across America, working families struggling to make ends meet, why baby products that are required by law are not exempt from Trump's tariffs?
Again, Congressman or Congresswoman, it is a matrix, and many of these products, unfortunately, are made in China, and
Mr. Secretary, reclaiming my time.
It's
an unacceptable answer. You've had 9 months. You told me it was under consideration. You've had 9 months to think about it, and while you've been thinking about it, working families have been struggling. When it is required by law that they have many of these essential baby costs, your report from the Department of Treasury refers to them, car seats, as essential safety tools. So if you can acknowledge that, this is...
I will acknowledge the gas to run the car.
Well, listen.
Is at a 5-year low.
You've included asbestos in your exemptions. So you're telling me you can do asbestos and not baby products that are... Excuse me, it's my time.
I think you would want children to be safe in their homes.
Mr. Secretary, parents with newborns don't want to hear your excuses. They need to keep their babies safe. They want to comply with the law. And they need action to lower costs, period. So will you exempt baby products from tariffs, yes or no?
Again, we will
yes
look
or
into
no?
it.
Mr. Secretary, respectfully.
We will look at.
Mr. Secretary, respectfully.
Congresswoman,
yes
I do
or
not.
no?
I am the Treasury Secretary. I am not the USTR.
Reclaiming my time.
I am not the President of the United States.
Reclaiming my time.
So you're asking the wrong person.
I'll take a commitment. Mr. Secretary, you are taking my time. Reclaiming my time, Mr. Secretary.
This is Financial Stability Oversight Council.
Mr. Secretary, then I ask for your advocacy then. Because a no or a non-answer is unacceptable to the working families you claim to care so much about. Moving on.
I don't know, it's the gentlelady's time.
I'm agreeing with you. You will have my advocacy.
Okay, thank you. Can you say that again for the record?
Sorry.
Can you say that again for the record?
I
will have your advocacy?
I am one voice.
For an exemption?
I am one voice.
Okay. Have you been paying attention to the high rate of unemployment for Black workers? Are you aware of that? The high unemployment rate for Black workers?
It is traditionally higher than for all workers.
Well, listen, it's through the roof right now. There's hundreds of thousands of Black workers that have been pushed out of the workforce, and the unemployment rates for Black workers and all workers are among the highest they've been since the COVID-19 pandemic. Black workers contribute over $1 trillion to the U.S. economy, but the push out of these workers from the workforce has led to a loss of $37 billion in the GDP, with Black women being among, just so y'all know, the most educated and most active in seeking work. Their push out is a glaring warning sign for where our economy is headed, because Black workers, Black women in particular, have always been the canaries in the coal mine. So this is a problem for everyone. Black women are bearing the brunt, but everyone will feel this hurt. I have led letters to Fed Chair Powell calling for action to be taken. He is also a member of FSOC. So I want to ask you, Mr. Secretary, will you commit to analyzing Black unemployment rates specifically and its impacts on financial stability? Yes or no?
I will analyze Black unemployment rates.
Wonderful. And when will you get us a report and a plan of action? I was thinking March 6th.
I can't commit to a date.
Okay, all right. Well, I think March 6th makes sense. That'd give you over a month, which is more than enough time to convene that working group and to report out your findings. I know you already have the infrastructure to do that. So at the end of the day, Black families, Black futures, and the lives and livelihoods of all who call this country home are depending on you to act. And with that, happy Black History Month. I yield back.
And thank you, and I was sorry to see you not run for Senate.
Gentlewoman yields back. Chair recognizes the chair of the Subcommittee on Oversight and Investigations, Mr. Muser from Pennsylvania.
Secretary Bessent, thank you very much for being with us, and thank you when you state that it's now Main Street's turn. I can assure you the people of Pennsylvania's 9th Congressional District greatly appreciate that, and your remarks are quite refreshing. The previous Treasury Secretary, once when I asked what their economic growth initiatives were, they implied that federal spending was their primary, if not only, growth initiative. So clearly, under your leadership and President Trump's and the Republicans in Congress, passing the family's tax cut delivered meaningful tax relief, billions to workers and small business owners, no tax on tips, regulatory reform, no tax on overtime, 100% depreciation. All this is driving our savings. All this is driving our economy for a booming GDP, Q3 and Q4 in the over 4% range. So things are going very well. We expect 2026 to be pretty exciting as well. Secretary, if there is anything that was asked that is still on your mind that you would like to respond to, why don't you go ahead and do so?
Again, this is supposed to be a Financial Stability Oversight Mission, and that we have taken this very seriously, and we believe that a lack of growth, one of the reasons I am sitting here and came out from behind my very quiet and nice private life, is because I was worried that the U.S. was going to become like a European-style social democracy. And indeed, what we are seeing in Europe, in many countries, is the death spiral of higher debt, raised taxes, lower growth. The U.S. will have reported likely, despite the government shutdown, despite the longest government shutdown in history, 4.1% growth for the past 3 quarters. And so we have been successful at that. Europe last week celebrated 0.3% growth. So it's no comparison. Right. And I think we are beginning to accelerate. And importantly, everything we are doing is to fix this terrible Biden inflation from the past 4 years, 21.5%, much more for working families, and we are bringing that down.
Your remarks and the president's remarks in Davos suggested that how you spiral down in your economy, which Europe has been doing, not having closed borders or secure borders anyway, over-reliance upon imports and driving the public sector rather than the private sector is a recipe for disaster. And so we appreciate you correcting the ship and moving the United States in the right direction. Just to get to some questions, Secretary, you've emphasized putting Main Street ahead of Wall Street when evaluating bank capital standards. How will modernizing the capital framework improve credit access and affordability for small businesses, homeowners, farmers, who ultimately, in the end, bear the costs for such excessive capital requirements?
Again, Congressman, the groups you just listed are the three most dependent on community and small banks. And we are determined to increase their lending capacity, to increase their proclivity to lend. And we want to do it on a safe, sound, and smart basis.
In the previous administration, we had regulators that imposed capital requirements well beyond the international peers, including the GSIB surcharge, the CCAR, Tier 1 leverage ratios. Are these frameworks being reviewed holistically to better support lending and economic growth?
Again, we are not going to let outside regulators determine what is best for the U.S. financial system.
Thank you.
The strength of the U.S. financial system is the depth and breadth, and we do not want to end up like Canada with 5 banks, Switzerland with 1, France with 3.
Absolutely, great. Your decisive action to confront what should concern all of us, certainly concerns us, is the rampant government benefits fraud uncovered in Minnesota. Can you walk us through how Treasury is using your authorities to identify, disrupt, and recover fraud proceeds, and how Minnesota is serving as a start for a broader national enforcement model?
Indeed, there is a substantial amount of waste, fraud, and abuse, and Americans and legislators on both sides of the aisle should be outraged when you are there and you see empty daycare centers, senior centers, and I personally met with 2 centers for autistic children, and they are not getting their benefits. So we are using our regulations under FinCEN to follow the money, which is what we've done, whether it's Mexican drug cartels, whether it's the mafia, or whether
Time has expired.
it is.
Thank you, Mr. Chairman. I yield back. Thank you, sir.
Gentleman yields.
Very, very much for your great work.
Chair recognizes the gentleman from New Jersey. Scott Heimer, you're recognized for 5 minutes.
Thank you, Mr. Chairman. Mr. Secretary, welcome. The 10-year Treasury is running around mid 4% range. Mortgage rates are still above 6%. That's keeping monthly payments high and pricing would-be buyers out of the market. The affordability crisis is increasing the homeownership gap in North Jersey, which I represent, and across the country. How can we get the 10-year down and help make homeownership more affordable? And that's what I'm really focused on.
Well, the 10-year bond had its best year since 2020 last year, and we actually had a fiscal contraction in the budget. The rest of the G7 bond market went up in yield. So if we continue to...
So you see a path where this, you think we'll continue to see it tick down, especially the long
Well,
run?
I think we can do that, and that I believe that we have Oliver Wyman's numbers, not Treasury's. They say that what has been done with financial deregulation unleashes $2.5 trillion of lending capacity into the U.S. economy. So by creating more capacity, there is less of a competition for scarce funds. So we are decreasing scarcity.
Thank you. I have a strong belief that AI will revolutionize financial services and delivering meaningful gains for customers and regulators and institutions if we do it right. FSOC's report strikes an encouraging balance, highlighting AI's potential to improve resilience and efficiency in financial markets while also noting that vendor concentration can create challenges. How is FSOC threading the needle to enable broad AI adoption while encouraging competition? And where can Congress help get this right so AI can flourish as a helpful tool for Americans in the financial markets?
Good. I think it's important to work together because what we see many times in these very quick technology cycles is the technology gets ahead of the regulation. So working together to keep the regulation in sync with the technology, whether it's for the financial system or for anywhere else. There's good news, as you said, it will change the interaction. The bad news is that it gives, whether it's state actors or independent actors, more tools.
What are you doing internally at Treasury? Obviously, you spent a lot of time on the security side on the Treasury piece of it. What are we doing about that?
Yes, so we have both at Treasury and then bringing in our private sector partners regularly. We do tabletop exercises in terms of what would happen if a malign actor got into the system. How can we reinforce that? As you may have read, before I arrived, Treasury itself was hacked
Yeah, I saw that.
by, we believe, a state actor. So again, increasing resilience, being aware, and working with our private sector partners for best practices.
Thank you. We're obviously seeing a combination of factors that historically make markets nervous, softer dollar with higher gold prices. Even if there are multiple drivers, those moves are often interpreted as investors seeking protection against policy uncertainty or concerns about U.S. fiscal and monetary credibility. They can also be early signals that global capital is demanding a higher confidence premium to hold U.S. assets. Are markets starting to price in a sustained shift away from U.S. assets, do you believe? And what are the specific indicators you watch to see if we're seeing that pullback from foreign investors?
Yep, so what we see at Treasury is we saw record amount of foreign inflows. Despite the popular narrative, we saw a record amount of foreign inflows into Treasury auctions last year. This year, many of the auctions have traded through the prevailing price before the auction. So we are still seeing very good flow, and we are still seeing massive flows into U.S. equities. And as several of the congressmen said, we are seeing very substantial foreign direct investment.
You know, one of the things I'm concerned about, this week Reuters reported Disney saw fewer international visitors at its U.S. parks. U.S. overall saw 6% fewer visitors despite global tourism revenue rising 6.5%. Canadian trips are down significantly, 22% year over year. Even at the Great Jersey Shore, 2025 beach tag revenue was down. What is the administration's plan to calm volatility? And obviously tariff policy has been part of this, so tourists can continue to choose the U.S.
Look, on some things, there's nothing we can do. If the Premier of British Columbia or Ontario wants to be especially hostile and tell people not to come to the U.S., that's a decision. I would say it's their loss. And as you said,
do you think we'll see less volatility with the tariff policy kind of firming up, or?
Less volatility in tourism?
Well, yeah, because it affects everything. People don't want to come
Gentleman's time
here.
has expired.
Thank you, sir.
Thank you.
Chair recognizes the gentleman from Indiana, Mr. Stutzman. You're recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, Mr. Secretary, for being here today. I'm going to yield to the chairman just briefly for a couple of questions he has.
Mr. Secretary, I appreciate members on the Republican side allowing you to clarify points on some key discussions back and forth, and we have had some good ones today. There was an exchange you had with my friend from Massachusetts, Mr. Lynch, about artificial intelligence. And in your capacity as chair of FSOC, our view here is that artificial intelligence offers great promise for better consumer service, fighting fraud, more accuracy in providing customer service, but also in providing a more robust compliance process with the rules in banking and the brokerage and securities industry. I wonder if you could talk from an FSOC point of view about a philosophy of overseeing artificial intelligence both in the financial services industry and among the supervisors of the financial services industry.
Yes, so again, we are working with our private sector partners to best practices. And Chairman, as you said, there are two pieces to this. There is service improvement, which we are, for instance, working on at the IRS. We hope to be able to use artificial intelligence there to get customer wait down and service down. On the other side, both financial security, alerting everyone to the risk of what is going on, but this is a transformative change. And as I mentioned to the congressman, we look forward to working with you on legislation to make sure that the technology does not move too far ahead of the legislation.
Very helpful, and I yield back to my friend from Indiana.
All right, thank you. And first of all, I just want to say thank you for being just a steady voice. Our economy is seeing tremendous growth. Is there volatility in places? Absolutely. We're still recovering. You know, we've heard a lot today from my colleagues across the aisle about tariffs and the effect on inflation in the U.S. economy. I just want to remind everybody, during the Biden administration, grocery prices increased by over 23%. I'm in the food industry. We've seen it. That growth has accounted for nearly 91% of grocery price increases since January of 2021. In Biden's first year alone, grocery prices increased by 6.5% as compared to 1.9% during President Trump's first year in office. And that's nearly 3.5 times faster, but yet my colleagues want to blame Trump's tariffs for the prior administration's uncontrolled and excessive spending. And I know that, what the Trump administration, you are doing is really, the America First policies are spot on. We've needed somebody in the White House to be fighting for America First. And so I just want to say thank you from folks in Northeast Indiana for your hard work to reset the table globally. And, we're a manufacturing, agricultural sector. We grow the food for the country. We manufacture, medical devices and all these other things. And so I just want to say thanks for that.
Well, good. And Congressman, just to tell you, I was with the president out in Iowa, and to combine two of your themes, manufacturing and the farm economy, we were with the CEO of John Deere, and he is building a new factory in Indiana, and he's building one in Indiana, one in North Carolina, and the president said, "What made you do that?" And he said, "The tariffs."
The tariffs.
Yeah.
No, this really is putting manufacturing in a position to compete with China, whether it's a CNC shop, whether it's the medical device industry. There's obviously some pieces there with regulatory environment, things like that, but it's really giving manufacturing a spot. One thing I would ask, and if I could maybe share with your office, I had a foundry owner in the office yesterday, and there's some definitions around foundries. And so I'd be happy to send that information over to your office to take a look at it. It's a industry that's, of course, very important for America, and I know you all care very much about manufacturing and the steel industry, so I'll send that over.
Good, with pleasure.
Yeah, but anyway, my time's about to expire, but I do want to just say thanks, because it's, what people back home are really dealing with is this cost over the last 5 years. And for you to really reset the table, they believe in America. We just need to show them that we believe in America as well, and that America can be great.
Good. Well, Congressman, there's a level and there's a rate of change. The level is very difficult to get down. We're trying as hard as we can, but we've slowed the rate of change greatly.
Yeah. Thank you. I'll yield back.
Thank you. The gentleman from Michigan, Ms. Tlaib, is now recognized for 5 minutes.
Thank you. Mr. Secretary, a bank's leverage ratio is important, right?
Well, there are numerous leverage ratios. Congressman, which one are you referring to?
So, for the record, if I may, Mr. Chair, I'm going to submit the Bank Capital's analysis semi-annual update for the record. May I?
Without objection, so ordered.
I want to talk about the way that we look at global systematic important banks, what do you guys call it, G-SIBs, is that right?
That's correct.
That's what I'm talking about. They're banking organizations that could trigger a financial crisis if they failed, correct?
And they could trigger a financial crisis by not lending.
Yeah, so the leverage ratio is important when we look at it, right?
Again, I'm not sure which leverage ratio.
Okay, so I'm looking at here, this chart, okay? It says tier 1 capital. Does that help?
Tier 1, that's helpful.
Okay, so I know it's kind of hard to see, but the green line is the community banks. You see how high that cushion is? That it's about what, almost 11%? I know you can't see it. It's fine. I was going to enlarge it for you.
As an act of good faith, I'll take your word.
Yeah. So the largest bank capital analysis for the Federal Reserve Bank of Kansas City, it shows that last June, the tier 1 leverage ratio of community banks was at 10.83%. For the banks that pose the largest threat to global system, what they call G-SIBs, this is the big banks, the ones who take all the risks. You know this, right? Their supplementary leverage ratio was about 5.8%. That's a huge difference, right?
Correct.
Okay, I'm getting there, I promise. Yep. Do you think the largest, most complex banks are roughly half are as risky in the threat that they pose to the financial system as a community bank in my district?
Well, I think, Congresswoman, what you're neglecting to think about is the composition of the assets and the capital. So the capital at the G-SIBs can be much more liquid, where the banks in your community are much more, as we're used to seing in the movies.
Well, let me explain to the public why community. Yeah, I understand. Community banks, though, lend out equivalent about 75% of their deposits to real economy. Some people refer to as Main Street, but we call it the real economy. People, families, communities. The largest banks only lend about 40% of their deposits into our real economy. Instead, they rapidly expand their loans to hedge funds and private equity that you're calling liquidity, they can liquidate, right? Is that what you're saying? Is that what you're saying?
No, I'm also
I'm
saying they hold a much higher,
yeah, but the
a
big
much
banks are the
higher
ones who
group
keep
of-
failing, right?
What's that?
The big banks are the ones who keep failing.
No, many small banks
Well,
fail
that's
too.
because they're getting pushed out. We're not actually supporting community banks.
Well, as I've said, I think more than 100 times today, I support community banks, and what
I
I don't want
understand.
to see
You could
is
say it, but you got to do something about it. But listen, so
I've met with more than 200
I know,
community
Mr.
bankers.
Secretary, but this is pretty bad.
So
Because the fact that community banks in my business have almost twice as much capital percentage-wise compared to banks that pose the largest threat to our financial system, that shows that just how much playing field's tilted towards Wall Street. You understand that, right? That's where the risk is. The big banks do far less for our real economy, for everyday people. And that's what I'm trying to say, because Trump's regulators recently, finalized a rule to modify the supplementary leverage ratio that applied to the largest banks. Many former regulators and experts have warned that such step will actually undermine the safety and soundness of our largest banks. The final rule will result in a reduction of about $219 billion, about 28%, in capital at the bank subsidiaries of global systematic important banks, GSIBs. Again, my residents don't know this, but the thing is, they end up with having to pay the cost when they fail. And so I'm just trying to stress to my colleagues how important it is, because Secretary, last November, didn't regulators reduce it again, the capital requirement, right? Yes or no? They
again,
did.
Congresswoman, I want to be polite, not say it's naive,
Yeah.
what the road you're going down, but much of the excess capital has been invested in the U.S. Treasury market, and keeping those yields low helps the borrowers who want a mortgage or a small business or an ag loan.
But are you paying attention how much they are lending versus community banks?
Yes, we pay very close
really
attention.
low.
I've been a financial
isn't it
analyst
low?
for over 40
Do you agree
years.
it's low?
Sorry?
It's
No,
still very low.
It's not relative to the historical level.
Mr. Secretary, if you came to my district, you can go to Detroit or the suburbs. They will tell you the big banks do not loan to them. And if they do, it's predatory, it's not supportive. It's the local community banks that support them in owning home ownership and small
The gentlelady's
businesses.
time's expired.
Congresswoman, you and I are in complete agreement.
The gentlelady's time's expired. The gentleman from
except on the
California,
capital
Ms. Kim,
ratios.
is now recognized for 5 minutes.
Thank you very much. Secretary Bessent, it's really great to see you before our committee again. I want to thank you so much for working very closely with me on delivering the historic SALT relief to the tune of $40,000, because with that, my constituents in Orange, Riverside, and San Bernardino counties will finally be able to see the relief as they file their tax returns. The 4 times increase in the SALT deduction, coupled with other provisions of the Working Families Tax Cuts Act, will result in supercharged tax returns, helping more American families get back on their feet after the years of failed Bidenomics. Last year, you noted that Treasury would revisit the 2023 guidance and analytic framework. And you also highlighted that FSOC has other tools, such as issuing recommendations to member agencies that are more tailored and precise than designation power. So Secretary Bessent, can we expect a new proposal for non-bank guidance that will be released sometime 2026?
We should expect that.
Thank you. I look forward to seeing that proposal when it's finally released, and hope there will be a public comment period to ensure stakeholders can weigh in and help shape that guidance.
Good. And the Congresswoman, the other thing that I would point out is we had a lot of talk about affordability today, and you were a great advocate for the One Big Beautiful Bill. And what we're seeing, unfortunately, in states like yours, that the state revenue authorities are not going to mirror the no tax on tips, no tax on overtime, no tax on Social Security, deductibility of auto loans, so which is very unfortunate. To the extent that anyone in the California delegation, whether Democrat, Republican, the New York delegation should push their states to follow through for working Americans.
You can count on me on that. Let me shift gears now. I want to focus on the Community Development Financial Institution Fund. I was really happy and relieved to see that staff at the fund were restored after the conclusion of the Schumer shutdown late last year. I know that you share my view that the fund's work is critical to serving communities that typically do not receive the traditional banking services. So can I ask you how you are planning to make the fund more effective and efficient as we move forward?
Well, what we want to do is focus on community revitalization, not unrelated and ill-advised social policies. And we want to drive reforms, new restrictions on the use of funds, and we want to focus on the program's statutory intent.
I know
making the lives better for people in their communities.
Sure. CDFI fund, as you know, has bipartisan support, and I think it also has a bicameral support. So I look forward to continuing to work with you on the future of this critical program. But I also want to talk to you and thank you for being willing to come to California and investigate all the fraud, waste, and abuse. Unfortunately, Gavin Newsom has he tried to hide all those, fraud and waste under the carpet, allowing more than $32 million of unemployment fraud that went unchecked. The state has also watched $13 million stolen from California students because of the AI-generated ghost students enrolled in community colleges. I suspect this is just the tip of the iceberg in California's fraud, waste, and abuse. And I've been talking a lot about this. Unfortunately, sadly, the state that I love and I live and I represent a district from California has become a fraud capital of the world. So sad. But that's why we need your team in California. And is there anything that you can share to that end, how your investigation into California fraud is proceeding?
There's nothing I can share right now, but I have spoken to Dr. Mehmet Oz at HHS, and he is laser focused on the healthcare fraud that's going on in California, which seems to be substantial.
Yes, I also sent a letter to Gavin Newsom to that end, and I was glad to see Dr. Oz sending a letter demanding. So now state of California is now in the process of returning $1.6 billion to the federal government. So thank you for that, and I look forward to continuing to work with you. Thank you for joining us.
Thank you.
The gentleman from New York, Mr. Torres, is now recognized for 5 minutes.
Thank you, Mr. Chair. Mr. Secretary, does the President have the constitutional authority to remove the chair of the Federal Reserve or a member of the Board of Governors solely because of a policy disagreement?
I'm not a lawyer, and I don't have an opinion.
You have no opinion on whether the President can remove a board member at will?
Well, I believe that the board member has committed.
No, just in general. I'm not asking about a particular case. I'm asking.
Or malfeasance.
I'm asking about the President's general authority. Let me ask it differently. Do you believe that the unitary executive theory applies to the Federal Reserve?
Again, I think we'll have to wait and see what the Supreme Court says.
What is your opinion?
I'm not a lawyer.
What is the administration's opinion?
There are varying opinions in the administration.
What's the prevailing opinion? The official opinion?
Again, we'll have to see.
Do you consider the Federal Reserve an executive agency or a legislative agency?
I consider it an independent agency.
So neither executive nor legislative?
So we'll see.
Therefore, independent of presidential control. So it sounds like you do have an opinion.
Again, we will see. We will see, Congressman.
Okay, thank you for establishing the independence of the Federal Reserve.
I do believe that the Federal Reserve has to maintain credibility and be like Caesar's wife, beyond reproach.
And undermining the independence of the Federal Reserve is a threat to that credibility. So I know you're no fan of the New York Times, but let me reclaim my time. The Wall Street Journal, which is hardly a leftist publication, published an article with the following headline, quote, "Trump claims factory construction is up, contradicting U.S. data." The article then goes on to note, quote, "President Trump claimed that the U.S. factory construction is up by 41%, a number that doesn't appear to be supported by the government's own data. One of the stated policy objectives of the Trump tariffs is to bring back manufacturing jobs. Yet since the so-called Liberation Day tariffs, of April 2025, we've seen the net loss of manufacturing jobs. Do you know how many net manufacturing jobs have been lost since April 2025 under your watch?
Well, a couple of things. Manufacturing operates with very long leads.
What's the number?
I believe
Is there a number?
I believe it's about 67,000.
70,000.
Yes.
70,000 jobs lost.
So, but again,
despite the stated objective. Let me proceed. Let me proceed. I'm going to reclaim my time.
Flip a switch.
I'm going to reclaim my time.
Construction.
Let me reclaim my time. The Purchasing Managers Index measures whether manufacturing is expanding or contracting. A PMI above 50 means expansion. Below 50 means contraction. Since the so-called Liberation Day tariffs of April 2025, has the PMI been mostly above 50 or below 50?
We just had the biggest increase in over a decade, and we are well above 50 now.
Has it been mostly above 50 since April 2025?
Again, long and variable lead times in manufacturing that you may represent.
Let me ask it differently.
Financial center, not a manufacturing.
Since April 2025, for how many months has the PMI been below 50?
Where are we now? Where are we now?
I'll give you January went up, but what about April to December? It was below 50 for 9 consecutive months.
Where are we now?
So the score is 9-1. 9 months of manufacturing contraction versus 1 month of expansion.
I look forward to seeing you next year.
So one of the stated policy objectives.
And we'll keep score.
Yeah.
Okay?
One of the stated policy objectives of the Trump tariffs is to bring back domestic production. Does the Trump administration regret imposing tariffs on goods that cannot be produced domestically at scale in the United States? Do you realize in hindsight that that was foolish?
Do you realize that we use the leverage to bring down tariffs from other countries to take down non-tariff barriers?
Tariffs on bananas gave you leverage?
Yes, with Colombia, with Brazil. Okay. I think, Congressman, you're being very naive with negotiating strategy.
We were promised reindustrialization. A tariff on bananas did not lead to domestic banana production. It simply made bananas more expensive for American businesses and consumers. The same is true of coffee.
Countries negotiating in a more fulsome manner.
Are you willing to commit to no longer imposing tariffs on any product that has neither a domestic substitute nor a national security rationale?
That would be the definition of foolish in a negotiation.
So you're not willing. You're willing to impose tariffs that make more expensive goods that we cannot domestically produce here in the United States,
again,
and that have no national. What is the national security nexus of bananas and coffee?
Again, why would you do that? There are numerous things when you negotiate with Indonesia. There are things that are only made in Indonesia, but the Indonesians brought down their tariff barriers or non-tariff barriers.
I get it. We have to make bananas great again. I get it. Thank you, Mr. Secretary.
Yep.
The gentleman from New York, Mr. Garbarino, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you, Secretary, for being here today. First off, let me lead off. I was one of the people you were in negotiations with over SALT last year, and I really appreciate the hard work and the commitment and helping us get it across the finish line. And a lot of my constituents are going to see a big benefit.
Congressman, I can tell you, as also the IRS chairman, that the second largest refunds are going to come from your constituents or go to your constituents because of the SALT deduction.
It's going to be great, and hopefully, like myself, the rest of my constituents, I think, are going to plow that money back into the economy with some purchases when they get their refund this year. So thank you for all the hard work you did there with us. Last year, you oversaw Treasury's efforts to implement President Trump's executive order to phase out paper checks, eliminating a costly, inefficient, and more fraud-prone process. Part of the EO directed the Treasury Department to work with financial institutions, consumer groups, and other stakeholders to address financial access for unbanked and underbanked populations. Secretary, can you share more on on the work stream and particularly how Treasury plans to incorporate digital technologies or payment solutions to increase financial access for unbanked Americans?
Again, we are trying to bring them into the financial system, and we are trying to, one of the ways is over these individuals' phones. And what we see, especially for the cohort you described, is they are especially susceptible to theft of the paper checks. They may not have fixed addresses. The fixed addresses or the mailboxes may not be secure. Someone from the New York delegation in Staten Island brought this to my attention for her district.
I appreciate that. And I really do think the administration has made serious strides to modernize our financial system through these initiatives. Are there other ways Treasury is looking to safeguard against fraud and improper transactions that you're working on?
Well, again, as we've done in Minnesota, we've found a substantial amount of waste, fraud, and abuse. And we want to know, with our geographic targeting order, we have pushed down the threshold for reporting for money service businesses, which these are non-banks, to $300. And we want to know if you are wiring money out of the country, that are you on public benefits? Because one of two things must be true. You're receiving more public benefits than you need, so you can wire it back home, or you have stolen the money.
Is there anything that Treasury is working on to, any other payment modernizations that you are all working on right now?
We're constantly working on payment modernizations. We're working with the Fed to modernize their Fed now. We are looking at ways on digital assets also.
Great. I'm going to switch gears a little bit here. Myself, just as any other member has constituents that will face emergencies, you can't plan for those. Whether it's a natural disaster, medical emergency, unexpected, your refrigerator stops working at home. So that they have to, and a lot of people don't have savings accounts, so they often have to rely on short-term credit to cover basic expenses that arise from these emergencies. Would you agree, Secretary, that access to credit can be a critical lifeline for millions of Americans, particularly middle and lower income households?
Yes.
What actions is the administration taking to promote affordable and responsible access to credit for American households?
Again, we believe by some of the financial deregulation that we have done, especially for community banks, this will lead to more credit for communities rather than the money coming from a distant credit card agency.
I appreciate that answer, Mr. Secretary. And last, as chairman of the Homeland Security Committee, cybersecurity is one of my top priorities. Secretary, can you describe what the administration is doing to strengthen cybersecurity across the federal financial regulatory agencies, particularly in light of last year's breaches at OCC and CFPB that had information leak?
So the Treasury, we're committed to making risk-informed resources. We constantly work on emerging threats, and we are in close collaboration with our financial sector partners, both as a push and a pull. We recently had a group of them into Treasury for a very large conference on best practices, sharing with each other, sharing with us, and we've used that as a convener, and then our convening ability, and then also
Gentleman's time has expired.
We've identified it as a financial stability concern.
I appreciate my time has expired. Thank you.
Chair recognizes the gentlewoman from Texas, Ms. Garcia. You're recognized for 5 minutes.
Thank you, Mr. Chairman. And Mr. Secretary, earlier in response to someone else's question, you talked a little bit there toward the end, but I'm not sure that there was a time for follow-up about, I think you said 10 to 20 million immigrants that are responsible for the driving up the housing costs. Is that what you said?
I'm referring to a Wharton report, yes.
Do you know what they based it on, what data, what information they looked at?
Yes, the survey by survey, community by community. You could go, if you'd like, we'll have my people post it on the Treasury X account as we speak.
Well, thanks for the cooperation, because I'm just completely baffled. The average new home sale is about $500,000, and you're saying that it's driving up the housing crisis when DHS is over there trying to pick up and deport people because, quote unquote, they're a drain on society, they're dependent on public benefits. So if you're on public benefits, how do you afford a $500,000 house?
Well, let me clarify your confusion, because
I'm not confused, sir. Don't be demeaning to me, all right? Because I'm going to object and ask the chairman to make you answer questions.
Anyway, I'm trying to explain to you that it is rental income and rental properties.
Do you really think that people have you been to the rental places of immigrants? I have people in my district that are in rental houses that I wouldn't rent to anybody. They're not expensive. They're probably $500 or $600 a month. You think people that can barely afford housing like that's the housing that we're talking about when we talk about the housing crisis?
D properties push up the price of C properties. Inflation in C properties pushes up the price of A properties. Inflation in the price of A property, B properties pushes up A properties. So it moves up the stack. And if you think that somehow the laws of supply and demand do not apply to housing, I would say you're incorrect.
No, well, I'm not incorrect because,
the
only thing that we might say about immigrants is that we don't have new housing because they can't, there's a shortage of labor supply because they build the houses and you all are more focused on deporting them than having them stay here and build. Mr. Chairman, I'd like to introduce three items to the record. Construction workforce shortages are leading cause of project delays as immigrant enforcement affects nearly 1/3 of firms. Second, how the ICE crackdown has impacted Minnesota's economy. And third, the price of cruelty, how Trump's mass deportation agenda endangers all.
Without objection, it'll be put in the record.
Thank you. Do you have any idea how much we're spending on ICE every single day for enforcement?
Again, the representative, this is the Financial Stability Oversight Commission.
But you're the treasurer. You're the treasurer. You're supposed to follow the money. In response to questions on this side, you're always talking about, well, we follow the money. Well, have you followed the money? How much are they spending every single day in Minnesota and other states where they occupy cities, terrorize communities, and try to break up our country?
Again, President Trump has secured the border. He was elected on a mandate.
Well, I disagree with you, and I think
you disagree that he was elected?
I think you're confused, but let me ask you about something else.
Okay.
Maybe you'll answer this one. You also recently announced the formation of FSOC Household Resilience Working Group that will focus on American households' financial condition. American households across the country, especially in my district, which is a working class district, Texas 29, have experienced firsthand the destabilizing effects of climate disasters. Property insurance or insurance companies are leaving Texas, California, Florida, and many other states because of growing climate risks. I myself have felt the impact. My constituents feel, Mr. Secretary, what, if anything, are y'all doing to address the risk to households of mortgages and other forms of credit becoming unavailable in certain regions of the country due to climate change?
Again, Congresswoman, are you familiar with KLW 24?
No.
It was the base for everything that was done with climate and with all the proposed climate legislation, and it has been discredited. So everything that FSOC previously did, based on climate, has been discredited.
Who discredited it? Nature Magazine has retracted the economic commitment of climate change more than 18 months after first learning that the paper was fatally flawed, with authors acknowledging that its errors are too substantial for a correction. I'm sorry, I'm not familiar with Nature Magazine. We're relying on Nature Magazine to determine public policy? Unfortunately, that's what
Gentlewoman's time has expired, and I
FSOC
invite the Secretary to respond more.
Mr. Chairman, I'd like a response in writing. Thank you.
Yes, Gentlewoman, we'll have those answers to you in writing. The gentleman from Wisconsin, Mr. Fitzgerald, you're recognized for 5 minutes.
Mr. Secretary, thanks for being here today. Appreciate all the work that you've done, and certainly look forward to working with you in the future. I did have just a couple questions, though. In many ways, the CSEs are far less risky than they were before the financial crisis. And one of the reasons has been that the CSEs, that credit risk transfer, the CRT piece, those programs. However, some industry experts are concerned that the CRT program have been significantly diminished and focus on capital arbitrage instead of the real risk reduction. Can you just kind of in general discuss the importance of the CRT with regard to the CSE in ensuring that they're transferring a significant amount of credit risk to the private market and really are then avoiding the risk that the taxpayers take on?
Good. So the CRT, or the credit risk transfer, is very important at FSOC and the attendant agencies, the members. We closely monitor to make sure that there is no daisy chain effect, that the quality of the risk transfer is at least as high as the entity from which it was bought. What we saw in the GFC was a complexity can create a daisy chain. So what we want is transparency. But I think CRTs are very important, but they cannot be opaque.
Very good. You called for, you originally called for kind of a fundamental reset of financial regulation, and then you emphasized kind of Treasury's active role in promoting just more efficient, effective, and appropriately tailored regulation. While we've seen progress in tailoring the supervision, can you just tell us kind of overall how you've tried to move the entire department kind of in that direction?
Again, as FSOC, I have convening power, and so that would be, what you're describing would be done by the Federal Reserve regulation, the regulatory body. Vice Chair Mickey Bowman has done an excellent job, the controller of the currency and the FDIC. We have tried to get them aligned in what they are doing and for tailoring, and to understand that the reason 50% of small and community banks have disappeared over the past 15 years has been because of a one-size-fits-all regulatory strategy, which clearly it does not.
Very good. Keep up the good work, and thank you for being here today, and I yield back, Chairman.
Thank you.
Gentleman from Wisconsin yields back. Chair now recognizes the gentlewoman from Georgia. Ms. Williams, you're recognized for 5 minutes.
Thank you, Chairman Hill and Ranking Member Waters, for having this conversation today. And thank you, Mr. Secretary, for joining us. Mr. Secretary, you noted in your introductory letter to the 2025 FSOC report that the Council has formed a new household resilience working group that will focus on American households' financial condition. Well, Mr. Secretary, as the Congresswoman for Atlanta, I'm here to make sure that that includes all families. As you noted, financially resilient households can better withstand shocks, maintain essential consumption, and avoid costly debt cycles. Discrimination in lending or an investment impacts growth opportunities for Black-owned small businesses, which means discrimination is, in fact, a threat to American financial stability. Atlanta has the largest racial wealth gap in the country. Supporting entrepreneurship and access to capital within the Black community can help close that gap, Mr. Secretary, but I need your help. Small businesses like those in the Fighting Fifth are critical to building and maintaining household wealth. Per Brookings from 2017 to 2022, the number of Black-owned businesses surged, representing over half of all new employer businesses. In 2022, Black-owned firms with at least one employee added $212 billion with a B in revenue to the economy and paid over $61 billion in salaries. More broadly, over the last 10 years, minority business entities comprised approximately 50% of new businesses started in the United States and created 4.7 million jobs. According to the US Census, there are over 9.2 million minority-owned companies in the US, employing 8.7 million workers and generating more than $1.8 trillion in annual revenue. However, Mr. Secretary, there are significant barriers blocking sustainability and growth of Black entrepreneurship. That's why I launched a Small Business Advisory Council in my district to hear directly from small business owners in my district. Because access to capital, as we heard in all of the conversations, continues to be one of the biggest challenges that these small business owners face. The first major hurdle for Black entrepreneurs in starting their business is a lack of startup funds, equity, and collateral, a result of the racial wealth gap. During the Biden administration, the Minority Business Development Agency delivered $7.1 million in funding to Georgians through its business centers and capital readiness programs. But President Trump signed an executive order continuing the reduction of the federal bureaucracy, directing the destruction of the Minority Business Development Agency. Mr. Secretary, what steps has FSOC taken to assess the impact of discriminatory lending and investment practices on Black small business owners and the stability and growth of the economy overall? And how does FSOC factor discriminatory investment practices into its assessment of threats to our economy?
Again, we do not view that as a financial stability concern, but I do view it as a concern. And as I've repeatedly said, that we would be willing to work with you on tailoring for banks in your community to give them more lending power, because what we have seen is that with 50% of the small banks that have disappeared, I don't have empirical data, but I can tell you that my strong hunch would be that many of those would have been minority banks. So we would like to see more de novo banks, whether they are in Black communities in Atlanta, whether they are in Latino communities, whether they are in Asian communities.
So, Mr. Secretary, you don't think dismantling the Minority Business Development Agency had any impact on the U.S. economy at all?
Again, very difficult to tell in a complicated multivariable economy what impacts, whether it's good or bad, for the aggregate versus the individual.
Mr. Secretary, I'm here to be the voice of the people that sent me here, and I welcome you to join me in Atlanta, and I would love to introduce you to some of these small business owners that have been greatly impacted by this dismantling. Also, in the 2025 FSOC report, placed a premium on deregulation and demonstrates the administration's optimism about the use of AI to make financial institutions more efficient. As you noted, AI used properly could provide numerous benefits to financial institutions by enabling them to provide innovative services cheaper, faster, to a broader set of customers and under very economic conditions. For example, currently, some lending institutions are using AI to evaluate a customer's credit worthiness through alternative data, such as cash flow history. And I see my time is about to expire, but my question is, Mr. Secretary, what proactive steps does FSOC recommend regulators take to combat lending discrimination, which may be compounded through the use of AI, as banking institutions increasingly use AI to make lending decisions?
And
I would love that answer.
We invite the Secretary to respond to your question in writing.
Thank you.
We thank you both. Now recognize the gentleman from New York, Mr. Lawler. You're recognized for 5 minutes.
Thank you, Chairman. And first, Mr. Secretary, thank you for being here, and thank you for your leadership in helping get the Working Families Tax Cut bill across the finish line. And in particular, thank you for negotiating over the issue of SALT, the state and local tax deduction. That was a big win for the American people. A core goal of U.S. stablecoin policy is to keep dollar-denominated stablecoins issued, regulated, and supervised here in the United States rather than offshore. Today, a substantial and growing share of the dollar stablecoin market operates outside the U.S., as foreign jurisdictions move quickly to establish legal regimes that encourage dollar stablecoin issuance in their markets. Foreign-issued stablecoins already compete globally by offering consumers economic value and incentives to use and hold them. And countries like China are actively using economic incentives to drive adoption of their digital currencies. As Treasury implements stablecoin legislation, do you agree that U.S. rules should preserve enough flexibility for American issuers to remain competitive so dollar activity stays onshore, transparent, and under U.S. oversight?
Congressman, and again, I think, as you know, I used to have a house in your district. Yes. Given the tax regime in New York, I'm not sorry that I'm no longer there. I hope it will come back. It's a beautiful part of the world. With stable coins, I would say what we want is U.S. best practices. The stable coins can go around the world, and indeed we are seeing I believe we will see the adoption, especially in emerging economies, or maybe any other individuals who want to hold the U.S. dollar. But I think it is paramount, as was done with the Genius Act, to put in U.S. best practices.
Agree. Different topic. Fraud scams by bad actors are estimated to affect 15% of American homes, representing about 20 million American households in total. And given that losses to these scams often amount to $575, consumers face meaningful financial harm even from a single incident. At the same time, 37% of all U.S. households cannot cover an emergency expense of over $400 with cash or savings. And a fraud loss can be devastating to the average American. These losses can lead to missed debt payments and damage to credit scores, which in some cases prevent home ownership. We've seen a renewed focus on fraud by this administration with the announcement of things like the Scam Center Strike Force, and I'd like to strongly encourage the administration to adopt an all-of-government approach to combating fraud and scams. Secretary Bessent, what role do you think Treasury should play in fighting scams and fraud? And does the FSOC committee have any initiatives planned for the coming year?
Yes, so Treasury through FinCEN was part of the group who took down the big scam centers in Asia. We were very focused on places like Laos, like Burma, like North Korea, and even Iran. And the other side of that, Congressman, is that it's used for nefarious. Once the money's stolen, not only has a U.S. citizen been hurt, but it's used for nefarious purposes. So we are constantly monitoring that, and we are working with our partners because, as you said, AI can be both a benefit, it can be both a blessing and a curse. So we think properly managed and rolling it out using private sector partners, we can cut down on that shocking number. I was not aware 15% of Americans are subject to it, but we've also got to be very careful because it will make malign actors more able to pull off bigger scams.
Yeah, well, and kind of continuing on that front, there's been a growing concentration of cloud and AI model providers and the risk that results if a small number of firms control critical financial sector infrastructure. How is FSOC assessing the financial stability implications of this concentration, particularly in scenarios of an outage, cyber incident, or foreign-based remote access vulnerability? And I had introduced legislation that we passed recently through committee, the Remote Access Security Act, ended up passing the House with strong bipartisan support. What steps is FSOC taking to ensure that financial institution reliance on third-party AI and cloud providers does not expose the system to remote access risks?
You'll need to answer that question in writing, Mr. Secretary. The gentleman's time has expired. Pursuant to the agreement with the committee and the Treasury Secretary, we'll have one more questioner because the Secretary has a hard stop at 1:30 p.m. And so the chair recognizes the gentleman from San Jose, California. Mr. Liccardo, you're recognized for 5 minutes.
Thank you, Mr. Chair, and thank you, Mr. Secretary, for testifying before us today. I know in addition to your many responsibilities, FinCEN comes under your duties as well in managing, and FinCEN has been very outspoken in this administration and other administrations in expressing concerns about alternative remittance systems, also known as, I think, informal value transfer systems. Is that fair?
Yes, sir.
And there are many concerns, I know, with these alternative systems, including lack of documentation, anonymity, their informality make them very attractive to money laundering. Is that true?
Yes, sir.
And in fact, in particular, Chinese money laundering organizations have been very effective at utilizing these systems to acquire access to U.S. currency in various ways for nefarious means.
We were very focused on Chinese money laundering organizations, which originally began as a way for Chinese citizens to get money out of the country. As China clamped down on the leakage, they morphed into partners with the Mexican drug cartels. So we are very focused on all of that.
I appreciate that, and I support that. I understand there has been some research, including published by the Government Accountability Office. A GAO report in 2016 and other studies as well that have found that fines and obstacles to remittances are not very effective at stopping the flow of remittances through in the aggregate, but in fact tend to push these remittances away from legitimate companies and remittance systems into these alternative systems. Are you familiar with some of that literature?
I'm familiar with that thinking.
This administration last year, through H.R. 1, imposed a tax on remittances in Section 4475. You're familiar with that, is that right?
I am.
And as you know, many residents of the United States depend enormously on these remittances, in many cases to keep their families alive in foreign countries because it's pretty darn difficult to immigrate to the United States these days. You're familiar with the importance to so many residents in the United States to be able to have access to remittances?
I'm familiar with the difficulty coming into U.S. illegally since January 20th of last year, yes, sir.
And quite simply, legally as well. I have residents in my district who have been waiting 20 years to get a green card, and they've been going through all the legal channels. So there are many obstacles, it's fair to say. Is that fair to say, Secretary?
I don't know the specific instances that you're considering.
I invite you to my district, and you can meet the nearly 40% of my residents who were born in a foreign country that makes Silicon Valley the extraordinary place that it is, and they'll tell you their tales of woe in trying to get through this system. In January, you indicated, quote, "We will strongly push to prevent anyone receiving federal government support funds from sending money overseas." Is that right?
100%.
In reaction, a policy analyst at the Cato Institute said, quote, that these kinds of actions are building, quote, "building a legacy of financial surveillance and control." Do you recall that?
I don't read the Cato Institute, but I do believe in financial surveillance for the remittances that should not be remitted, and we should also know where the money's going.
And if you agree that imposing taxes and obstacles to using legitimate systems may compel people to use some of these informal mechanisms, don't you agree that undercuts our objectives in addressing money laundering, the illicit activity in these alternative systems?
I disagree with taxes.
But your administration and you supported that tax last year.
I disagree with your assessment that taxes can be a hindrance.
Don't you agree that taxes can alter behavior in various ways? When people understand something costs more, they may choose a different path?
I would say that they would choose the safest path.
Well, they may choose a less safe path if it just costs more to use the safe path. Don't you agree?
I believe that anyone who has legitimate income, is in the U.S. legally, and is sending money home through gains where they have paid taxes, they would choose the safest path.
Mr. Secretary, unfortunately, the data doesn't show what you suggest. It shows the opposite, and we're encouraging money laundering through these kinds of actions. These obstacles and these taxes are not helping American consumers.
Expired. Appreciate the gentleman from California. I want to thank Treasury Secretary Bessent today for his testimony. Without objection, all members will have 5 legislative days to submit additional written questions for the witness to the chair. The questions will be forwarded to the witness for his response. Mr. Secretary, please respond no later than March 11th to our questions. This hearing is adjourned.